Good morning to you from the Box Hill Mountains of California, just east of LA. It's not long after dawn. It's a beautiful morning. Lovely red sky over there. Red sky in the morning, shepherd's warning, but I don't think there are too many sheep in California, so I think it's going to be a lovely Californian autumnal day. And welcome to Money Markets and More. And today's video is based on an early morning mosquito. Today's piece is called "Could Gold Be the Basis for a New Global Currency?" It's quite a long video, longer than my normal ones. It's based around the cover story I wrote for a Money Week a month or two ago. I think I'm going to be flapping my ears quite a bit over the course of this interview because it's there's a few early morning mosquitoes about. So gold, I'll just show you the view from the other side. You can see the mountains there behind me. It's quite a beautiful spot, and we've got a plane overhead. I don't know what he's about. Well, it's only like a four-seater or something. Anyway, gold and gold miners are back in a downtrend. Occasionally there are glimmers of hope, only for the sellers to come piling back in. The slide began shortly after the commodity spike in the spring, following Vladimir Putin's invasion of Ukraine, and it has been relentless. And I shake my head. Isn't gold supposed to go up during times of war? Isn't it the go-to asset in times of inflation? Apparently not. However, if one views gold, this mosquito won't leave me alone. If one views gold as simply another currency, then its performance has not been, oh my goodness me, the Cowboys never had to deal with this, as bad as the headline numbers suggest. It hasn't done as well as the dollar, but it's outstripped the pound and the euro and the yen. And even though gold is quoted in US dollars, the dollar price of gold is irrelevant to a British investor. If you pay pounds to buy gold, you will eventually sell for pounds, assuming you sell. And so all that matters is the sterling price of gold. And this chart shows gold in pounds over the last 10 years. Gold cost £700 or £800 an ounce in 2014, 2015. It's now just shy of £1,500 per ounce. It's not far off its highs, and it remains in a clear long-term uptrend. In other words, gold has done its job and hedged investors against the mess that has been sterling these last 5 years. But really, you want to see gold rising against all currencies. Panicking capital has been fleeing to the US dollar, which has been occupying the safe space that might normally belong to gold. The US is tightening monetary policy faster than the UK, Japan or Europe, and the prospect of higher yields on US assets has made the dollar more attractive. It's ahead in the rate rising cycle. And until Japan, the UK and Europe start tightening as aggressively, the dollar is surely going to remain strong. The ideal macro environment for gold is for equities to be weak, we've got that, and for government bond yields to be lower than expected inflation. At present we have the former, weak equities, but not the latter. Longer term inflation expectations are still below 3%. If they were at 8% or 10%, but rates were just 5%, then capital would seek out the alternative that is gold. And that's when real interest rates, inflation-adjusted interest rates, are negative. You want to be at a point where central banks are reluctant to raise rates, and yet inflation won't go away. And in the US, at least, we don't have that. So how permanent is this inflationary episode? How much will central banks raise rates? These are all questions we must answer if we are to make the decision to buy and hold gold. Inflation might come down a little as weaker oil and metal prices filter through, but I think we're going to remember pre-COVID inflation numbers as halcyon. The reason for that is prior to COVID, When they printed money, it went into the housing market and into financial assets. It didn't go into the real economy. This time when they printed money, they gave it out to people, and so it's gone into the real economy. And that's why it's coming through on the inflation numbers. CPI looks at, the real economy, basket of everyday goods. It doesn't look at financial assets or house prices. So I think this inflation stays. And as I say, we're going to remember pre-COVID inflation numbers as halcyon. Another issue to ponder is whether gold is an analogue asset struggling to adapt to a digital age. It's perhaps the oldest substance on Earth. Gold, it was present in the dust which formed the solar system 4.5 billion years ago. How they measure that number, I don't know. And its origins are thought to lie in supernovae and the collision of neutron stars. It came to Earth via asteroids that then bombarded the planet. But all that gold is still here. It's highly malleable, but it's also the most permanent substance there is. It's thought to be indestructible, and all the gold that came to Earth those billions of years ago is still intact. You can batter it into a film just one atom thick, but you can't destroy it. And so all the gold that's ever been mined, save that which has been dissolved in aqua regia, is thought to still exist, even if lost. And that's why it has been such a good money. It lasts. Value today, however, is almost entirely digital. Money itself is digital. Just 2 or 3% of Western money exists as cash. The bond market's digital mostly. Software, intellectual property, cryptocurrencies. Digital is where the value is. And most of the Western growth has been in the digital economy the last 30 years. Rapid recent geopolitical developments, however, suggest that gold may be far from irrelevant. With Putin's invasion of Ukraine, I was quite amazed by the speed at which the US weaponized the dollar and the banking system. Some $300 billion of Russian central bank assets were confiscated. That's about a fifth of annual Russian GDP, and Russia was frozen out of SWIFT, the international payment system. Putin retaliated by demanding rubles for Russian gas. The currency wars well and truly began. Now, if Russia is not to be isolated internationally, it needs an international currency it can trade with. And within the last couple of months, Putin has said the issue of creating an international reserve currency based on a basket of currencies of our countries is being worked out. And Sergei Glaziev, a former Kremlin advisor, now the Minister of Charge of Integration and Macroeconomics of the Eurasia Economic Union, is, it seems, supervising a new money system for the EAEU, the Eurasia Economic Union of China. And he says the world's new monetary system, underpinned by a digital currency, will be backed by a basket of new foreign currencies and natural resources. All interested countries will be able to join. The weight of each currency in the basket could be proportional to the GDP of each country, its share in international trade, as well as population and territory size. In addition, the basket could contain an index of prices of main exchange-traded commodities, gold and other precious metals, key industrial metals, hydrocarbons, grains, sugar, as well as water and other natural resources. Western nations may have shunned the Russian Davos in June, the St. Petersburg International Economic Forum, but there were key representatives from China, India, Iran, Turkey, many of the Arab nations were there. And the recurring theme was trade between non-Western powers in a US dollar-controlled world of sanctions and a new non-Western international currency. Okay, meanwhile, we have the Shanghai Cooperation Organization, which had its latest summit last month in Uzbekistan. Now, in terms of geographical scope and population, it's the world's largest regional organization. It covers 40% of the global population and over 30% of GDP. Members: China, Russia, India, Pakistan, Iran, Kyrgyzstan, Tajikistan, Kazakhstan, Uzbekistan, and Turkey's president Erdogan says he is considering membership. Now, these are not exactly pro-Western nations. Both Putin and Xi Jinping of China called for a reshaping of the international system. There are various infrastructure projects being developed. There's a trans-Afghan railway link from Uzbekistan to Pakistan, a China to Central Asia natural gas pipeline, and a China-Kazakhstan-Uzbekistan railway. China is beholden to both Europe and the US for its exports. It would seem it wants to open up new markets. Are these nations seriously going to want to trade in dollars? You can bet your bottom dollar that many of China and Eurasia's brightest minds are plotting an alternative system. But it is a lot easier said than done. To back a currency with commodities raises all sorts of problems relating to raw materials. And if you use futures, you need to trust your trading partner. It's the same with systems based around government debt, GDP and fiat currencies too. And the record of the regimes involved is hardly unblemished. The body language between the various leaders, especially China and Russia, it does not suggest total trust. So how then to make a money system that is practical and that everyone can trust? And the answer is an obvious shiny yellow material, analog asset in a digital world or not. Now, it's often bandied about that among China's many ambitions is for the yuan to be the global reserve currency. But every international reserve currency in history started out backed by gold, whether it was the pound, the dollar, the florin, or the currencies of the ancient world. They were all at least as good as gold, if not gold itself. They may have ended up debased into oblivion, but they started off backed by gold and sometimes some silver too. And it was only because the money was sound that it won global trust in the first place. Even John Maynard Keynes, who in 1924 declared that the gold standard is a barbarous relic, almost 20 years later, in 1942, he proposed a supranational currency for the after the World War II, backed by gold. It was called the Bancor. So even he understood the practicalities of it. Would such a system be practical today? Why not? We know that many countries in the SCO have plenty of gold. They've been increasing their holdings. In the 14 years between 2006 and 2020, Russia's central bank more than quintupled the country's gold holdings, from around 400 tonnes to today's 2,300 tonnes or so. It's now the world's fifth largest gold owner. And then there is China, which has been quietly de-dollarising. Since 2021, so in the last year or so, it's lowered its holdings of both US dollars and US treasuries by a bit more than 10%. Its holding in US treasuries have dropped by over 100 billion since 2021, and it now has less than 1 trillion in US debt for the first time since 2010. Its US dollar foreign exchange reserves have come down from 3.25 trillion to 3 trillion over the same period, so down a little bit less than 10%. Having seen what happened to Russia, China will not want to be too vulnerable to a banking system that is run by the West. It will not want its US dollars confiscated and all that wealth to go up the Swanee with them. And then there are China's gold holdings, and I consider this the most important story in world finance, and yet it is largely ignored. China has far more gold than it says. Its stated reserves, plant these figures in your head because we'll keep coming back to them. Its stated gold reserves are 1,948 tonnes, say 1,950 tonnes of gold, which is about 3% of its foreign exchange reserves. America's are 8,100 tonnes. That's about 65% of its national reserves, so a bit more than 4 times more. And by the way, don't tell me that America hasn't ordered its gold in over 50 or 60 years. I know. There's a great joke, by the way. the head of security goes to the US president. He says, "Mr. President, there's no gold in Fort Knox." And Mr. President says, "What do you mean there's no gold in Fort Knox?" And the guard says, "There's no gold in Fort Knox." To which the president says, "Double the guard." Now, first, let's look at Chinese mining, and then we'll look at its imports, because it's the world's largest producer of gold and it's the world's largest importer. This past decade, it's produced about 15% of all the gold mined in the world. Since 2000, it's mined roughly 6,800 tonnes, call it 7,000 tonnes, and it keeps all the gold it mines. Over half of Chinese gold production is state-owned, and the export of domestic mine production is not allowed. So given 7,000 tonnes of production, or just under, its official figure of 1,950 looks dubious. Chinese mining companies have also been buying assets in Africa, South America and Asia, and international production now exceeds domestic production, only by a little bit. Where's all the gold going? It's also the world's top importer of gold. Now, you can't audit everything it imports. You can import, look at what it imports via Hong Kong, but Switzerland and Dubai are much harder to audit. But its imports via Hong Kong have amounted to more than 6,700 tonnes since 2000. Most of the gold that enters China, though, goes through the Shanghai Gold Exchange. Not all of it, but most of it. And so the Shanghai Gold Exchange is a proxy for demand. And we know that since 2008, 22,000 tonnes of gold have been purchased and delivered to physical gold buyers in China. There is also the gold that enters China that isn't accounted for by Shanghai Gold Exchange withdrawals. A central bank, for example, oversees the Shanghai Gold Exchange, but its purchases do not go through it. It likes to buy 12.5 kilo bars, and they don't trade on the Shanghai Gold Exchange. It often uses dollars in exchanges in London, Dubai and Switzerland, while the Shanghai Gold Exchange sells its gold in yuan. So there is plenty of tonnage we cannot account for. Then we've got the gold held in China, whether as bullion or jewellery, prior to 2000. And the World Gold Council estimates 2,500 tonnes in privately held jewellery, plus domestic mining and official reserves, and you get a figure of around 4,000 tonnes. So we cobble this all together. Cumulative production, imports and existing stock. And this is just the stuff we know about, and we arrive at a figure of around 32,700 tonnes. As I say, that's just what we know of. I've spoken to numerous analysts and they all arrive at similar estimates. Alistair MacLeod of Gold Money thinks it's higher still. So how much of this gold is state-owned? Now remember, there are numerous other state bodies besides the central bank that own gold. The Army, the State Administration of Foreign Exchange, China Investment Corporation, the Sovereign Wealth Fund. So there's plenty of bodies. Precious metals analyst Bron Suchetsky of the Perth Mint, or formerly of the Perth Mint, he guesses 55% is state-owned. But even at 50%, the implication is that China owns more than 16,000 tonnes, which is double the US figure. So I cannot see how its national holdings are anything like the 1,948 tonnes they say they are. But to declare markedly larger holdings would cause an unwanted surge in both the yuan and the gold price. The state's US dollar reserves would be devalued. It would be a direct challenge to US supremacy. And China is probably not yet ready for that. For now, it follows Deng Xiaoping's doctrine, we must not shine too brightly. But remember, eventually China wants to reclaim its rightful place at the top of the world. And if that Russia-China axis wants to weaponize money, as the US has done, all China has to do is declare its gold holdings, and perhaps even partially back the new currency it plans to launch, a central bank-backed digital yuan, with gold. An unbacked Western fiat money, particularly the euro and the pound, where they've been printing money and they've got no sort of, they have to import all their own energy. Unbacked Western fiat money risks losing a great deal of its purchasing power in such an event. It could create chaos in the West. But that is the card that China now has with its 20 years of relentless accumulation. In short, any new money whose aim is to get the Shanghai Cooperative Organization trading with each other outside a US-controlled banking system may well need to involve gold for it to work. And it wouldn't surprise me to see them attempt the Glaziev system described above, and for it not to work because of the trust problem and because most of the nations involved are going to want to retain the right to print. They could then try a second time, giving gold a more prominent role, and this time it might work better. So far from being an irrelevant, antiquated asset, then gold could well prove the key to a new currency, spearheaded by China and Russia in the medium term. It's not going to happen tomorrow or even next year. In the meantime, inflation could well become entrenched, so the scenario of bond yields lacking inflation expectations may well be with us before too long, and hedging your portfolio with gold remains a good idea. There are many ways to get exposure to the yellow metal. You can just buy gold bullion. You can buy an exchange-traded fund via your broker, which tracks the price of gold in your portfolio, or you can commit suicide and buy gold mining companies. I have an affiliation deal with the Pure Gold Company, so I'll put a link to them in the comments below, in the description below. If China plays its gold trump card, miners, currently performing very badly, are going to see a dramatic upward revaluation of their properties. Here's hoping. As I say, my recommended bullion dealer is the Pure Gold Company, with whom I have an affiliation deal, and I'll put a link in the comments. Look, you can just see the dawn coming up over there, the light catching it. I also like Goldcore in Ireland. Thank you very much for watching. Please subscribe to the channel. Please subscribe to my Substack. I should also flag this. On November 23rd, 24th, I'm going to be doing a show wearing my comic songwriting hat. You probably know I write and perform comic songs with the full band, the Gilets Jaunes, at a venue called Crazy Coqs, which is underneath Brasserie ZL, right by Piccadilly Circus in the centre of London. There's 2 nights, November 23rd and 24th. I think the 23rd is already sold out, but there are still tickets for the 24th. It is the most brilliant venue for music, and it's just going to be a really good night. I'm really looking forward to it. So if you're around 23rd and 24th, look out for that, and I'll put a link to that in the comments as well. Thank you very much for watching. I'll be back with another video very soon. And look, I think that is Sugarloaf Mountain, and it's just catching the sun as the sun comes up. But it's quite an interesting place where I am. Very scrubby. Anyway, cheerio.